Well, let's ask our next guest, Hassan Heikal. He's the chief executive of EFG-Hermes. Now, that's the biggest publicly traded Arab investment bank, and he joins us from our Zurich studios. Sir, thank you so much for joining us. Now, first of all, it does seem that we have quite a lot of reassurance from the United Arab Emirates Central Bank saying that they stand behind the banks. Has this debt crisis, as we're calling it, been overexploded last week just because so many of the markets were closed?
I'm not sure. I think we need to just define first what is the problem. The problem is you've got probably a couple of Dubai entities that have got relatively short-term maturities that are coming over the next 24 months. And there is no way that these two entities will be able to sell assets or refinance in the open market in a manner to repay the upcoming maturities. So one, it is confined to one or two entities, and it's not the whole of Dubai.
But sir, they're big. They are very big entities, and there's a risk of default.
If you just allow me to finish. And then I think the second issue is that we believe that the government of Dubai, instead of dealing with each maturity on a standalone basis, have decided to pull the plug so that the restructuring and the reorganization of the whole of all of that happens once and for all. I think the true standoff today is not between necessarily Dubai and Abu Dhabi, it's between Dubai and some of the global banks that were not willing to refinance some of the short-term maturities that are upcoming. So if you look at who owns that paper, that 30 or 40 or $50 billion paper that people are talking about, it is predominantly local banks. So the whole UAE domestic banking market is exposed, and hence the announcement today by the UAE Central Bank. And the balance is owed by some of the global commercial banks that were betting that the government of Dubai will not have the will nor the guts to pull the plug and say we need a restructuring and face a public embarrassment. Now that that has happened, those global banks, namely HSBC, RBS, ABN, Standard Chartered, will have no choice, and along with the local banks, will have no choice but to refinance effectively and extend the maturities of both Dubai World and maybe one other entity linked to the government of Dubai.
Sir, of course, what happened last week was that a lot of the banks were just scared that this may fail, that nothing was too big to fail, certainly in the Arab world. Is this a concern of yours?
I mean, I cannot imagine that not necessarily. I mean, if you look at the 40 or $50 billion that people are talking about, and half of that being more or less owned by domestic banks, the UAE banking sector cannot afford the $20-25 billion loss. So, and I think the announcement by the Central Bank of the UAE today is a step in that manner, that we will stand behind our banks in refinancing effectively some government-related entities of Dubai. The global banks, I cannot imagine that banks such as HSBC, Standard Chartered, RBS would be willing to take collectively a $15-20 billion hit, especially with the stature and of the owner of the companies that borrowed. So I think that standoff needed to take place. Maybe there was a lot of talk about an Abu Dhabi put in the sense of coming and bailing out and repaying all of these loans. Some of the funding came last week. That was not enough. And I think Dubai had the short-term liquidity to repay the upcoming maturities, but they've decided they cannot deal with it on a deal-by-deal basis and maturity-by-maturity basis, and hence have elected to pull the plug. And now it's up to the global banks and the domestic banks collectively to reach a compromise in terms of extending some of the maturities for 5 to 7 years in our view.
Sir, if we just step away from the details a second, how has this impacted the perception, of course, of Dubai as a financial hub, and will it affect investment in the country and the region as a whole?
I think obviously short term, yes, it has impacted, and I think there is an issue of public perception and credibility. Having said this, I have no doubt that this is completely different than what you have seen, for instance, in Southeast Asia or Latin America last decade, because you don't have a devaluation of the currency, you will not have run-on deposits, you will not have banks collapsing, and you've got the sovereign that is very well positioned. I'm talking the sovereign being the UAE government. So that's completely different. Yes, short term, the impact is negative, but I think medium to long term, I don't think that will necessarily impact even the positioning of Dubai as a financial hub. I think they will need to scale down some of their capexes going forward, but Dubai, in our view, will remain probably the financial center.
Sir, your co-CEO has said about a month ago that actually Arab stocks will outperform the rest of the world. Do you believe this will still be the case? Did he mention what's the time horizon? 12 months, the next 12 months.
Look, I think the fundamentals of the region are very strong. If you look at the public debt, the loan to deposit of the whole banking sector across the board, most of these economies are growing this year by anywhere between 4 to 7%. Very low gearing at the level of the consumer and the level of the corporates. I think people look at one or a few entities in Dubai or here or there as a proxy for the region, which I don't think that is completely true.
All right, sir, a very quick word on your biggest concern for 2010 as we go into the new year.
I think what needs to happen in the next few weeks is full transparency. I think there's nothing wrong with the debt restructuring. I think what people need to do is just go to be open about it in a frank manner and show the restructuring plan in a transparent and in a quick manner. And I think that if that is behind us, and I think, you also need to remember that Dubai markets have been taking a hit over the last year as a result of that. So most of that has been priced in as well.
Mr. Heikal, thank you so much. Great to have you on the show.